This podcast channel is about you, successful international entrepreneurs, successful expats, successful investors. Sponsored by HTJ Tax. So we're doing this one a bit differently. We're streaming it live on Facebook as well. So good afternoon, good morning, good evening, depending on which time zone you're in. I know that we got quite a number of emails and messages about the time. And again, that's why we use Eventbrite, because Eventbrite helps sync the time and the date with your local device. So, but apologies for those who had any sort of inconvenience or confusion as to the actual time. It's good to see everyone. We're doing this probably every month now because we believe it's that time of the year and the demand is there. You have lots of questions. And as always, what we're going to do is keep it really tight. I'm going to talk for about 15, 20 minutes max on just some basic principles around US tax. And right after that, we just jump into Q&A because many of you have questions. We've got you messages on email, on LinkedIn, on Eventbrite, whatever. So we know there are lots of questions. So we leave ample time at the end for us to go through as many questions as possible before the hour is up. So once again, thank you for joining us this morning, this evening, whatever time zone you're in. My name is Derren Joseph. I run a semi-autonomous tax team within a larger practice called Moores Rowland. We have 30 offices in 12 countries. I've been based in Singapore. In October this year, I would be 8 years in Singapore. And this is my profile. Now, because I am licensed by the U.S. Department of Treasury as an IRS enroll agent, I'm required to say that I'm required to remind you, because I'm sure every webinar you've been to, they would issue the same reminder that everything we say here should not be construed as advice. It's considered like an educational piece. We're talking about general principles. And if it is, I know some of you have come as self-filers. I respect that. I appreciate that. But we cannot work with anyone who's going to. So you can't think that at the end of the hour, you're going to be equipped with everything needed to run off and file your own tax returns. That is simply not true. The intent here is to highlight certain key issues that you take to your preferred tax advisor. So again, don't think you're going to walk away with your notes full with all the key points you needed to do actual calculations. That's impossible, and it'll be professionally irresponsible for us to suggest that is even possible. And of course, we need to have the same disclaimer in writing as well. So nothing should be construed as advice, and nothing should be construed as encouraging you to pay less than your fair share of taxes in any jurisdiction to which you're exposed. And these are two guys that I use as references, and we can circle back to them if anyone wants to take a deeper dive into it. So this is when people say, well, I'm outside of the US, no one is paying attention, the IRS won't come bug me. One of them used to be my Facebook friend, and he no longer is, precisely because of that. He was arrested, and he had a really hard time because the IRS believed that he broke certain rules outside of the US. But we can get into that later if that's relevant. So key takeaways. I'm going to set the scene. I have this acronym called BEST, do your best. I want to talk about bank accounts, estimated taxes, state and transfer taxes. Just those to me are the core things you as a US exposed person needs to keep in mind if you want to stay on the right side of the IRS. So that's what I want to hit. And then I'm going to touch a bit on stimulus and President Biden, because Some of you have been asking those questions, and then we will just go straight into Q&A, if that's okay with everyone. So, citizenship-based taxation. I think it's quite well known and well understood that the US taxes you on your worldwide income, regardless of where you reside. The point I want to make with this slide is that, you know what, the US is not alone. People will commonly say Eritrea. Yeah, this is a country in the Horn of Africa, which also practices citizenship based taxation. But what we're seeing is that many advanced economies are trending in that direction. They're creating rules which have more or less a fallback position where you think, you know what, I'm outside of that country, and therefore I should have no responsibility to pay taxes back in the country of origin. Well, we're seeing those rules changing where there is now a responsibility, and we see that as a trend. So my point here is the US is not alone. Transparency. When someone, when I tell people, you're outside of the US, you're a US passport holder, you're a US citizen, you're a US green card holder, you need to stay on top of your taxes. People ask, well, how are they going to figure out, how do they know how much I'm earning in jurisdiction XYZ? And this is the answer. Checks and balances lie within a relatively new rule called FATCA, which stands for the Foreign Account Tax Compliance Act. Contrary to popular opinions or popular perspectives, it is not a tax. What it is, it's a framework for information exchange. What the US government has done since 2011 or so is go around the world and sign bilateral agreements with countries all over. And most countries in the world have now signed. And that would include countries or jurisdictions that you did not think would sign something like this. So it includes Russia, it includes China, basically everyone except, your North Korea, Iran, Cuba, countries that don't necessarily play well with the US. So most countries that you would be exposed to, they have signed this agreement. And what they have all agreed to do is bypass or set aside their own domestic bank secrecy laws and require all the domestic financial institutions to go through their books. So, for example, in the UK or Argentina or whatever the case may be, every financial institution needs to go through their books and flag individuals that they suspect of being US exposed and report those people to the US Treasury. Now, you may think that, I have more than one passport. I have more than one passport. Many of you do as well. And sometimes you may walk into a financial institution and you may open an account using your other passport. Now, there are rules built into that where what are called indices that the financial institution is supposed to look for. Some of them are more vigilant than others. And if they see any of these indices, then they are supposed to push the issue and inquire as to really whether you are US exposed. Even if you deny it and they still suspect that you are, they will report you without your authorization. So it's something to bear in mind. This is the check and balance. This is how the US government can find out what you're doing overseas. And when I say US person, I know I mentioned passports and permanent residents or green card holders, but it also includes substantial presence, which is a big deal right now because, as we know, we're in unprecedented times, and in 2020 and up to today, there have been many travel disruptions. So people have had to spend more time in a jurisdiction than they had planned to. And many people who are not Americans were trapped in the US and could not leave because travel was disrupted. And they may have triggered what we call substantial presence. So they spend more than a certain amount of time in the US. And as a result, they may have become US exposed from a tax perspective. Accidental Americans, these are persons born abroad. So obviously, once you're born in US soil, you are a citizen, but some people are born abroad to a parent. Once you have at least one parent that is US, considered to be US domiciled, whether you registered at birth with the embassy or not is irrelevant. I had this conversation with a client today. That person is a US citizen. Those kids are US citizens. And then there are situations where you may be married to a non-American, and it may be to your advantage to take what we call a Section 6013G election to treat that non-US spouse as a US person only for tax purposes. And they don't need to have a passport or green card. You may make that election because sometimes when you're thinking and you're doing your tax planning from very strategically, it may be to your advantage to do so. We could talk about that later on if there's any interest around that strategy. What are the responsibilities of US persons now that we've established who these people are for tax purposes? Obviously, you need to file and pay taxes. Now, what you would find when you deal with international tax from a US perspective is that greater emphasis is placed on reporting than there is on filing and paying taxes. So, you don't pay your taxes, interest and penalties. We're in a low interest rate environment. Depending on how much it is, it may not be very much. But if you don't report a financial asset, a mutual fund that you have overseas, a bank account you have overseas, it could be up to 50% of the unreported balance, so that, which is pretty aggressive, plus jail time. So civil plus criminal penalties. And the example I give typically is Florida, which is, for me, my home state. So there was a dentist in Florida, and this was a real case. He had about $1 million in an account outside of the US in Switzerland. And the IRS found out about it. It's a long story, but the point is the IRS determined that he did not report this foreign account. And again, all they're asking you to do is report. And this is on the heels of 9/11. There's an implicit assumption that if you're not reporting what you have overseas, that you're up to some sort of nefarious purpose. So this person was deemed not to have reported their bank account for 3 years, $1 million in it, 50% penalty. So that's $1.5 million for an account with $1 million in it. Now, he settled outside of court. So we don't know what it is. It's not recorded, but that's how the IRS views it. And when you look at the rulings this was like a few years ago, but when you look at the rulings that have been coming through recently, they have been and they continue to be quite aggressive in policing those US exposed persons who have bank accounts outside of the US and are not reporting it. So now, this is the core of what I want you guys to take away. And this is an acronym that we've developed, which we think captures the essence of what you need to do just to stay on the right side. And that's do your best. So B, bank accounts, as we established, it's not only including bank accounts, but financial accounts. So all your financial accounts outside of the US need to be reported. Now there's a threshold when the maximum aggregate balance is 10K, 10,000 US dollars. So, but once that threshold is met, all your accounts need to be reported. Unit trusts, mutual funds, even dormant accounts need to be reported as well. And also, if you are senior in the company that you work for and you have signing authority of the bank accounts for that company, those, even though you are not the beneficial owner of those accounts, they are the property of your employer. You just have signing authority. You need to report that. And even if, you can't sign, your co-signatory, so it's you plus another signatory, you need to report that. So bank accounts, please pay special attention to that. Estimated taxes. It goes without saying that the IRS does not like to wait until the following April to receive the taxes from a given tax year. They want to get it along the way. The very least, they want it quarterly. So 4 quarterly payments that you should be making in a timely fashion. Failure to do that, unfortunately, results in underpayment penalties. So estimated taxes, pay attention, do your calculations. When you were working in the US, most people are paid on a W-2. from which there's withholding every fortnight, every month, as the case may be. When you're outside of the US, there is no withholding typically. So you need to work with your chosen tax professional, calculate what in advance what the tax liability should be for a given year, and make sure that you have sufficient funds in play to remit quarterly payments to the IRS. Next, state tax issues. And this again is, unfortunately, this is not very well understood. So you have 50 different states, 50 different rules. There are 9 states without any state taxes, most popular of which would be Texas and Florida. But, for all the other states, you have a responsibility to file and pay taxes. When you're outside of the US, many times you would sever tax residency with those states, but most of those states are domicile states, which means that sometimes specific and intentional acts need to be made to sever tax ties with a given state. And if you did not make those specific acts, you're deemed to still be within their tax net, even if you have not lived in that state for many years. And I have clients that say, well, what are they going to do? I'm all the way in whatever jurisdiction. But at some point in time, you may return to the US. And once they find out, you have a big fat tax bill. And we've had people having their accounts in the US frozen, and just it creates complexity where it's not necessary. Just pay attention to your state tax issues. And we work with clients to sever tax ties to states that do have that will tax you when you're outside. It's good practice to reestablish domicile in one of the states that does not tax you to prevent complications. Last but not least would be your transfer taxes. This your gift and your state taxes. Gift taxes, perhaps so easily overlooked. You're outside of the US, you're living outside of the US, you get into relationships, you get married, you have friends, you have business colleagues, or whatever, who are not US exposed because you're overseas, right? And if you're in a relationship with them, there's an exchange of gifts. Sometimes you receive something or you give them something, as part of the relationship, as the case may be. That needs to be reported once it's over a certain threshold. So do not forget your gift. And again, this is a reporting requirement most times. No taxes need to be paid. It just needs to be reported. And then we have estate taxes. Unfortunately, it's kind of morbid. You don't want to think about it, but you want to have your affairs in order so that, God forbid you pass on. You don't want to leave a burden and a mess for your kids, for your spouse to deal with. And that's where some estate planning comes in. The estate taxes are a bit more complex in that your exposure for estate taxes isn't it hinges on the concept of domicile. So it is very, very nuanced, but we can talk about that in the Q&A if there's greater interest in understanding that. But all the takeaway is be conscious of transfer taxes. When you're speaking with your advisor, speak to him or her about the gift taxes, speak to him or her about estate taxes as well. Stimulus payments, of course, people have been asking. Many of our clients tend to be higher income earners, so they actually may not qualify for this. And if they, I get lots of emails on WhatsApp where, where's my free money? And I have to explain to them that you're above the threshold. I had that just today, client in South Africa had to, he's asking, well, where's my money? Unfortunately, the price of your success, you earn above the threshold for the stimulus payments. But for those who do earn on the, below and within the amounts that would qualify for this, there was the first round probably around last summer, and then at the end of December the second round was passed. So you should have got it either check in the mail or direct deposit to your US bank account. If you did not, speak to your tax advisor. There's an additional line in the Form 1040 for this tax year, for the 2020 tax year, which we're dealing with right now in 2021, where you can get a rebate credit. What does that mean? It means that whatever your tax liability may be for 2020, it would be reduced by the amount of the economic impact payment that you may not have received if you didn't get the check in the mail because you're overseas or the IRS didn't have your address, etc. And these things happen. If it is your due refund, the refund will be increased by the amount of the rebate credit. So make sure and speak to your tax advisors about that. Yep. There's a pretty comprehensive website. The IRS has quite a few pages on this with FAQs. So please, if you have any questions at all, the ample resources on the IRS website. Please have a look. I want to talk a bit about filing requirements because there's a misconception, a misunderstanding that people think, I'm outside of the US, I make less than 100 grand, therefore I don't need to file or pay any taxes. That is so far from the truth. People tend to conflate and confuse the foreign earned income exclusion with the filing threshold. The foreign earned income exclusion, it's an amount, I think it's like 107,000 for this tax year, but it moves with inflation, so it goes up a bit each year. And what that means is that amount would be sheltered from US tax. It must still be reported, but it's not taxed, but it must still be reported. A tax return must still be filed. And if you're wondering, well, what is the threshold for filing a tax return? It is actually pretty low. If you file married filings separately, the threshold is $5. So you filing married filings separately, even though you're outside of the US, did you make more than $5 last year? Chances are you did. You need to file taxes. So again, speak with your advisor and don't assume based on something in a Facebook group or whatever that you don't need to pay taxes. Get professional advice. Okay. Yes, I just have this one slide about the phase outs because people have been asking, what are the phase outs? So if depending on how much you earn, the amount that you get for this is the stimulus payment would be reduced and it goes down on a scale. So the more you earn, the less payment you get until you pass a certain threshold and you get nothing at all. Now, people have been asking about President Biden and what are his plans. Now, during the election campaign last year, he published a pretty comprehensive tax reform plan. It is pretty comprehensive, and it'll take probably an hour or more to have a conversation around that. So we don't have that time. So this is just like a snapshot of some key takeaways for someone who is US exposed but is living internationally as an expat, as a whatever outside of the US, as an entrepreneur, as a nomad, whatever the case may be. That there's going to be the first thing is that for those that are higher income earners, and when I say higher in this context, it's over 400K per year. Be aware that there'll be some additional taxes going to be levied. So, right now the highest band is, I think, 37%. So this pushes it to 37, 38, 39, 40. I mean, it pushes you basically over 50% is the takeaway. And there was a lot of debate and discussion around that during the election campaign. So for those making over 400K, and if this goes through, expect a higher tax bill. Now, bear in mind that everything is subject to negotiation. These are his plans, but once it goes to Congress, there'll be a lot of movement. There'll be horse trading. There'll be give and take. So it's unlikely that this is exactly what you're going to get at the end of that process, but this is what his opening negotiation stance would be. Those who run their own business, most of our clients now tend to be business owners as opposed to just employees. And GILTI, or the Global Intangible Low Tax Income tax, which came in under President Trump's Tax Cut and Jobs Act in 2017. Everyone is familiar with that. So basically, it's a tax on controlled foreign companies, so US owned and controlled companies outside of the US. It's an extra tax that was levied on anti-deferral mechanic. That's going to go up. That the GILTI rate is going to go up. So And that's on top of the fact that the corporate tax rate as well, and separate and distinct from that, the corporate tax rate right now is 21%. That's supposed to be pushed up to 28%. So these are some of the things that you need to keep in mind, and it's not too early to have a conversation with your tax advisor. Remember, a good tax advisor isn't a form filler. There's someone who sits with you or gets on a Zoom call with you, and you go through, this is my structure, this is the way my business is running. What can I do to protect myself? What can I do to preserve my wealth? What can I do to be more smart, more tax efficient with what I'm trying to achieve here? And so there are mechanisms that can be put in place to hedge against some of these movements. The lifetime exclusion is supposed to come down potentially, and so that has impact on transfer taxes. So this would be a gift in your estate taxes. What else? For those who have a trust, a trust is not necessarily the preserve of someone who's super wealthy. It's just someone who's really smart. Because these are legitimate tax reduction tools that anyone can access and leverage. So many of our clients use trust. I have a trust myself. It's a tool that's accessible to everyone. And there's certain changes that's supposed to be made to the trust in terms of the step-up basis on the death of a grantor. That may be removed, that step up in basis, which benefits your beneficiaries, your spouses, your kids, making sure that there's more money in their pocket. That's going to be revised. So these are plans. So in terms of estate planning, you need to be talking to your advisor around President Biden's plans. If you own a structure, you need to be talking to your advisor. If you run your own company, you need to be talking to an advisor. That's the takeaway there. So what I will do now is I will stop sharing and we can get into our Q&A. So please don't be shy. If you have any questions, feel free to write them. There's a chat box down below. For those who are on Zoom, that is. I'm also streaming this on Facebook, but for those in Zoom, please have a look in the chat box below and feel free to type your questions. Okay, question. If we're working from abroad, sorry, I'm just going to scroll up. If you're working both in the US and abroad, how do you file? That's a great question, Camille. Thanks for asking that. So it depends. Definitely, you are, once you're a US person, as we explained in one of the earlier slides. So you're a US citizen, you're a US green card holder, or you've triggered substantial presence. You need to file and pay taxes on your worldwide income. So in that sense, it makes no difference whether you're in Seattle or Singapore. You need to file and pay your taxes. So that's on the US side. That is a constant that won't change. How you can do it, if it is that there are a number of software solutions that are available in terms of the mechanics of doing it. One of the biggest software providers is Intuit. I don't work for them, but it's a fact, they're the biggest one in the market. They have a number of software solutions. If your situation is more domestic and lower income, there's TurboTax, which works well for that target demographic. If you have more complex structures and you're an expat and you're working abroad and you're making money overseas, Intuit also has, because they're trying to make money, they have more complex software solutions that deal with forms that TurboTax does not have. But of course, we are advisors, so we do suggest that you seek an advisor, not just who understands the US side of things, but the other jurisdiction in which you are exposed, which gets me to the other point. If you're not in the US all the time, you must be somewhere else. You need to pay attention to the rules in the other country in which you are working, because you may be exposed to tax in that jurisdiction. Most countries follow a 183-day rule. So if you are in their country for more than 183 days within their tax year, some countries follow a calendar year, some a different fiscal year, then you may be required to file and pay taxes in that country as well. And we always advise and we strongly suggest that you speak to an advisor who not just understands the US side, which is super important, but the other jurisdiction in which you're exposed. What do you do if you have a home in another country? Again, that is pretty common right now, where you are a bona fide resident is what we would call it. So it's not that you're just traveling outside of the US, but you may be a bona fide resident of another jurisdiction. Then chances are, depending on which jurisdiction it is, you're required to pay taxes in that other jurisdiction as well. Let's say it's in Singapore. If you're a bona fide resident of Singapore, as in you have a home there, you have, you pay your rent, or you may actually own a home, you pay rent, you're required to pay taxes on any income that you earn there, as the case may be, then you're required to file and pay taxes in Singapore as well. But once you're working with a tax advisor who knows what he or she is doing, don't worry, you're not going to be paying tax twice. Because even without invoking a treaty, so some countries do have a treaty in play. So for example, most European countries, Mexico, Canada, South America, many Caribbean islands as well. So there's a treaty in play, but you don't need to invoke the treaty to make sure you're not double taxed, because there's a system of foreign tax credits. So the US will say, well, okay, regardless, you need to file and pay taxes. That's a given. But we would respect the fact that you're already paying taxes in another jurisdiction. So let's say you're living in Singapore, Hong Kong, and you made $100 for the year, and Singapore says, well, just pay me $10 in taxes, and the US says, well, my tax bill is $20. What you do is you report to the US, I've already paid 10 to Singapore or Hong Kong, therefore I'm just paying the delta, the difference, which is an extra 10 to the US. So in other words, typically you only pay the higher of the two taxes. It's very rare to pay tax twice. It can happen. Where we're seeing it happen relatively often is when you are still domiciled in a state in the US. And that can happen, 50 different states, 50 different rules. But if it so happens that you are still taxed on your income from in a state, then depending on that situation, there may be double tax, because whereas the federal government in the US recognizes foreign tax credits, unfortunately, the states do not. So the states won't recognize the money you paid to that foreign jurisdiction. But in short, just to summarize, you, as an expat, you will be filing and paying taxes in the US. The question becomes, what about the other jurisdiction in which you live? If you're a bona fide resident, you should be filing and pay taxes, unless you're fortunate enough to live in one of those tax-free jurisdictions. I was talking to a client this morning in Dubai. Obviously, she lives in a tax-free jurisdiction. But if you're living in Singapore, most of my clients in Singapore or in Asia, then you're going to be filing and paying taxes there as well. So you look at the other jurisdiction in which you live, and then you balance it too, to make sure you minimize the tax burden across both jurisdictions and you're not taxed twice. So those are the steps. Next question. What do you do if you're a digital nomad with a US-based business? Are you obligated to pay taxes to each country you travel plus the United States? And that depends, right? It depends on the nature of your business. If you are US exposed, obviously you're going to be paying tax on your worldwide income. That is non-negotiable. Unless there's no way to reduce that or eliminate that really, unless you're willing to think about Puerto Rico, or you're willing to give up your US passport or green card. But that aside, the US side is non-negotiable. What if you are traveling around? You need the same steps that I explained in answering Camille's question will need to be done in this case as well. You need to look at each country in which you're traveling to and figure out whether you are triggering tax nexus, what we call nexus, which is a taxable presence in that jurisdiction. If your presence there does trigger nexus and you are taxable, then yes, the correct thing to do is file and pay taxes. Now, before COVID-19, a lot of this is before and after. So before the pandemic, people would do visa runs and they would move around, and I've met perpetual nomads, people that they live on a yacht. They've done well. They've exited from whatever deal they were in. They live on a yacht, or they just travel around and they live from hotel to hotel. They live that lifestyle. It is possible in a scenario like that where you're constantly moving, but you're U.S. exposed. You're filing and paying in the U.S. only, but not in any other jurisdiction. Now we live in the post-pandemic reality, so people are moving more slowly than before. In that case, you need to look at the jurisdiction. As I mentioned earlier, most jurisdictions tend to be 183 days. But other jurisdictions may say, well, 183 days to become a tax resident. But if you are working in our country, we want to tax you. And we've seen a recent case in Bali, Indonesia, where, again, it's been around for a while, but for whatever reason, and there's politics in that, but the point is someone was deemed to be working online, doing whatever they're doing online, and they were quite visible in promoting their business online while working from Bali as a US citizen. As a result, they were detained on a number of issues, one of which is my understanding is that they were deemed to be working because Indonesia is one of those jurisdictions which is very, very particular. If it is you enter Indonesia, you have to check on that arrival form. Why are you there? Their definition of a tourist is very, very strict. It's unlike the US. You can enter the US as a tourist before COVID-19, of course, and you can attend business meetings, you can do a seminar, whatever the case may be. If you enter Indonesia and you see you and entering as a tourist, you cannot attend any business meetings. You should not be working. So this person was deemed to have been working, and that was one of the issues that they had. Singapore is like that. If it is you enter Singapore as a tourist, why are you in an office? Why are you sitting behind a desk? And there have been issues around that. So it really depends on the jurisdiction. You just make sure that once you're in a given jurisdiction, you understand the immigration rules and you understand the tax rules. And we are in unprecedented times. Countries' nationalism is at a high. Unemployment numbers are rising, so politicians and locals, of course, and understandably so, very protective of jobs. And you don't want to break the rules because more so than ever before, there's a greater chance of being held to account. That's the point. So if you need to pay taxes, pay your taxes. Next question. Does Europe tax US pensions and rental income from the US? Well, Europe is 28. It's quite a number of countries. It's not one homogenous jurisdiction. In addition to which, within Europe, you can have more than one tax status. So, for example, this is as an aside, but I think it's related to your question. So we have, I maintain a blog. I have over 1,000 articles which are freely available on my website, htj.tax, which talk about jurisdictions. And I think it was yesterday we put up an article about 5 European countries, because Europe is not really synonymous with tax efficiency. It's one of the highest taxing jurisdictions in the world. Again, painting with a broad brush, but carved out within Europe, you do have opportunities for tax planning once you get the right advice. So, and I think in my article, I spoke about Ireland, the UK, Italy, Spain, and Portugal. And I see you mentioned Portugal. So those 5 countries, HTJ.tax. And I also put up a video every day on my LinkedIn and my other social media where we talk about opportunities for being smart when it comes to your taxes. But anyway, with those 5 countries and others as well, I think Belgium, France, Switzerland, they all have. But let's talk about Spain and Portugal. You can be in Spain, you can be in Portugal, and as a foreigner or an expat or a nomad living in Spain or Portugal, or one of the other European countries I mentioned, you can make an election with the tax authority to treat your income in a specific way, where they will only tax your domestic income. So in this case, Portugal, only the money arising from uh, in some sort of income producing activity in Portugal will be subject to Portugal tax. The rest will not. So stuff that you earn in the US is not subject to tax. Same in Spain. But there are exceptions. It's very, very nuanced. And this is where having professional advice comes in. If it's rental income from the US, it won't be subject to taxes in Portugal. But if it is securities income or if it is pension income, the answer is yes. It will be subject to tax both in the US and in Portugal. Now, up until I think it was around March 2020, the pension income would not have been subject to taxes in Portugal. But there were some complaints within the EU from the Northern European countries. They complained to Brussels and they put pressure on Portugal to amend that part of their tax rule. So if you are, and I'm talking about those who are in Portugal under the NHR or the non-habitual resident status. So your US income, that's business as usual. But if you apply for and you get NHR status, only your Portugal source income will be subject to tax. Your US income, no. But there are exceptions, one of which is securities income. But rental income won't be subject to Portugal taxes. And your pension income as of March last year, your pension income will also be subject to taxes in Portugal. If you grandfathered in, so if you had NHR status prior to the change in the rules last year, no, you won't be subject to, even the pensions won't be taxed in Portugal. So depends on when you got NHR. So again, Europe, very general, but I think these are the right questions to ask as a US person. Just take it as given that you will be subject to taxes on your worldwide income regardless of where you reside. So the question becomes, yes, I have US taxes to worry about, but I also have taxes in the other jurisdictions that I'm exposed to. How can I plan? How can I execute things in a way that minimizes my tax burden across both? And sometimes we have to do calculations that look at, well, by taking certain actions in, let's say, Singapore to reduce your Singapore income, you may actually be increasing your taxes in the US, and vice versa. By adopting and leveraging certain strategies to reduce your US taxable income, you may inadvertently increase your Singapore income. So they can't be looked at in isolation. You're asking the right question. My US side, I need to look at, but also the other jurisdictions in which I'm exposed. I need to look at both simultaneously. Any other questions? Please feel free to write them in the box below. Okay, scrolling. No other questions? Okay, well, in that case, I get off easy this evening. Last week when we did this, we just had to draw a line because the questions were coming in fast and furious. So I'm having an easy night. Or easy morning, depending on which time zone you're in. So I thank you for giving me a break. If you have any further questions, feel free to reach out to me. Easiest way is probably LinkedIn. Just look for me on LinkedIn. I post a video every day with free tax tips to look on it. Ghana. Someone has just asked about Ghana. Sorry, we have limited exposure with Africa. I deal with South Africa pretty often right now. South Africa and Dubai, and not Madagascar, Mauritius, but not Ghana. but I can introduce you to someone in Ghana who does Ghanaian tax. So just shoot me a message or an email. They my email and stuff is above when you scroll up in the chat box below. So we post videos daily with tax tips. We have over 1,000 articles free of charge on interesting jurisdictions. That is updated as regularly as we can. And you feel free to reach out if you just want a free Zoom consult to talk about your situation. And of course, we do these webinars. At this time, we're probably doing them every week. I'm doing one again tomorrow and next week and so on. Oh, sorry, my email is everyone. Tax. Okay. There we go. Help at HTJ.tax. Just shoot me an email. Feel free to follow, connect with me on LinkedIn. We're also on Instagram, on Facebook, even on TikTok. Somebody maintains TikTok, Twitter as well. Always tax tips, always trying to keep on the edge of what's going on. I'm not a one-person show. I have a great team around me, not just of other tax professionals, but marketing, who keeps all these different platforms up to date. So all good. Wait, somebody's saying that there are other questions. I've been asked to wait. Sure. Just feel free to, if you have another question, feel free to just type it in below. I'll give you a minute to compose. Otherwise, just feel free to shoot me an email. Okay. Yeah, just you can type your question below. Otherwise, you can just shoot me an email and I'll reply to it later on. If you're shy and you don't want to discuss it right now. Okay. All right. My US company was open in New Mexico last year. I'm still waiting for the tax ID, so I've not done any business. Shall I worry about filing anything for 2020? It really depends. So someone has an LLC in a state, doesn't matter what state it is really, in the US, and they're asking about tax filing. They in the US, an LLC, from a tax perspective, it is a special entity because it's actually, for tax purposes, it is disregarded. So it's what we call a pass-through entity. So if it is you are the only member, and LLC doesn't have a shareholder, it doesn't have shareholders like a C Corp. So if you are the only member of an LLC, it's a single member LLC, and the business activity will be reported on your Schedule C. So the LLC itself, assuming that the LLC doesn't pay taxes, unless you make a special election with the IRS, with the federal government, for it to be treated as a C Corp or an S Corp, or treated in a different way. The default is that it's treated as transparent. I know it sounds bizarre, but it's the IRS sees through it, and it's reflected on your personal tax returns. So in other words, if you have an LLC, any activity or no activity, whatever the case may be, it's reflected on your personal tax return. Is not, the LLC doesn't file a return. Now, what the LLC does, it files an annual report to the Secretary of State, which not necessarily giving financials, but what it seeks to do is informs the Secretary of State that the LLC is still in operation and is in good standing. But so that's not a tax return, it's not a tax report. The tax return from an LLC, unless you make an election, is on your personal tax return. Next question. As a non-resident alien and NRA, I opened a single member LLC in the US, coaching and training. What taxes will I need to pay? So if you are providing a service and you are an NRA, you are not US exposed, no passport, no green card, no substantial presence, no nothing. You do not set foot on US soil. then there should be no US tax liability attached to that LLC. And I repeat, once there's no nexus with the United States, you do not set foot on US soil, there should be no US taxes to pay. As I mentioned before, you file your annual report with the Secretary of State of whatever state you incorporated the LLC. But from a tax perspective, there are no taxes to pay. Now, then the question is, well, if you're not in the US, where are you? So if it is that you're in another country, then you have nexus with whatever other jurisdiction you're in, because you have to be, unless you are in space or whatever, you must be somewhere. So you need to check the rules of the jurisdiction in which you operate. And if the rules of the jurisdiction in which you operate mean, and most of them would say, you're exercising management and control of a company from within our jurisdiction, even though it is not incorporated in our jurisdiction, we deem it to be a company in our jurisdiction and it must follow the tax rules there. So to answer the question, NRA, non-resident alien, don't worry about the US, worry about where you are, because the tax rules may pull the LLC into the tax net of whatever jurisdiction you're in. Next question, I will not have a physical presence, so no nexus with the US, no employees of the US. I will serve companies from the US in various countries in Latin America. I will also be serving companies in Germany and the UK. What specific taxes will apply? If it is, it depends on whether you're providing a good or a service. If it is that you're providing a service and you have no nexus to the US, I maintain no US taxes, but your service must be provided from somewhere. Look at the rules of the jurisdiction in which you find yourself, and that's the answer to where you need to be filing and paying taxes. If it is you're providing a physical product, though, that is quite different. There's certain rules around physical product. Most people are familiar with direct taxes, so your personal income taxes, your corporate taxes. But if you're providing a physical product and you're shipping it anywhere, you need to be conscious of indirect taxes. So in Singapore, that'll be GST. In Europe, that'll be VAT. In the US, that's sales and use taxes. So the indirect taxes will come into play. And the indirect taxes are more sensitive to nexus than the direct taxes. Next question. I know New Mexico doesn't require yearly filing or renewing the LLC. I also understand there's no state taxes, but I'm not sure about federal taxes, what applies. If it is that you are a service provider, your service provider, so it depends on the scenario, right? So this is a scenario I'm getting. Your service provider, you're not providing a physical product. You are not US exposed. So no passport, no green card, no physical presence with the US. And under those circumstances, no federal taxes should be due. No federal taxes in the US. Of course, as I mentioned before, it becomes that you need to be somewhere. Are you in Dubai? Are you in Singapore? Are you in London? Are you in Paris? Are you in Buenos Aires? Are you in Mexico City? You're somewhere. And you need to look at the rules of the somewhere that you are to see whether it's taxes are being triggered by your nexus there, by you operating a business there. It matters not which bank account it's paid into. It matters not where the company is incorporated. What matters is where you, as the operator of the company, where are you? Where are you providing those services from? Where's management and control being exercised? Where's the substance of the company? And if the substance of the company is in Colombia, if you're in Medellin, in Cartagena, then that company can be taxed as a Colombian company. Any other questions? Okay. So that looks like it. Again, you can check my blog, frequent updates. We post a video every single day. We don't miss a day. We have podcasts. We have great articles. Let us know if we can work with you in any way. Otherwise, oops, non-resident alien for the IRS. Yeah. Sorry, I'm just looking. Yes. So you're an NRA, so you're not a US person. So that's correct. So any other questions, just let us know. We, as I mentioned, we deal with high income earners, but for those who don't earn that, within that threshold, we have free resources online, books. For those who are on Audible with Amazon, the books are available. You can listen to them for free, and you can get advice that way as well. And thank you very much for your time. And I will see you at some future point in time once flights start reopening. Hopefully, we'll meet in person and we'll resume the physical seminars as opposed to webinars. Have a good day, morning, evening. Bye bye.
Here are 4 ways we can help you. Number 1. Sign up for free webinars on US expat taxes and international entrepreneur taxes at www.htj.tax. Number 2. Stream premium educational videos at www.htj.tax. Number 3. Contact us for tax optimization consult over Zoom. Number 4. High net worth? We can quote for doing your US international taxes returns. Our books and upcoming event are available at htj.tax. Please subscribe, like, share, and comment below. Email us at help@htj.tax to engage us, to advise on international tax or business matters.